On Thursday, 23rd of June 2016, the people of Britain confounded all expectations by voting to leave the European Union, triggering political pundits in the mainstream media to write reams and reams of, well, worthless gibberish for why it happened, when the reason was very simple and self-evident in the results themselves, namely that the people of Britain, right across England and Wales, rebelled against the London Westminister elite, and so London, along with a few other southern regions, were the only ones to vote for Remain.
Today I'm going to vote for the first time.
So the people of Britain rebelled against the Westminster elite, rebelled against the bankers and the rich who have owned Britain for centuries, and were demanding that Britain's provincial wage slaves dutifully vote to remain within the European Union as being in the establishment elite's best interests, rather than the mass of the people of Britain who have had to suffer the consequences of the likes of out-of-control immigration, as the establishment elite effectively imported millions of cheap slave labour from across Eastern Europe and Southern Europe, regardless of the social and infrastructure capacity consequences that I have covered in countless articles and videos over the past year. Thus, Britain celebrated its Independence Day, which was immediately met by threats from the European Union bureaucrats and many leaders, with threats of a very painful exit for Britain, that the divorce will not be amicable, and that Britain will be made an example of, so as to act as a warning to other European nations against considering holding their own freedom referendums from what is fast morphing into a German empire, as post-Brexit 25% of the European economy will be German. My last video covered highlights of key events during 8 hours of BBC's coverage of the nights and mornings events from the close of polls at 10 PM. So in this video I will cover exactly what happened on the financial markets, primarily in terms of sterling and FTSE futures during a very volatile trading session that both draws a line under the build up to the vote and sets the scene of where I stand in what to expect next over the coming months and years. But first, a recap of my stance going into the polling day. For one cannot make money by perpetually sitting on the fence, as many commentators tend to do, and so one has to arrive at a firm conclusion of that which one deems to be the most probable outcome, which for me took a near year's analysis to arrive at as of the 12th of June to conclude that Leave would win the EU referendum, as illustrated by a series of videos such as the following uploaded on the 22nd of June. Against this, my forecast conclusion of before last Thursday's event, on the basis of a sum of a year-long analysis including over 120 articles and over a dozen videos, concluded that the most probable outcome was likely to be Leave winning on 51.3% against Remain on 48.7%, which both today's opinion polls and momentum are appealing to confirm, and hence implies that Leave, or Brexit, really does look like it's set to win tomorrow's EU referendum vote. And for why Brexit really is best for Britain and Europe, then see my most recent in-depth comprehensive analysis on the disastrous consequences of climate change on the world and Europe, that coupled with continuing population growth looks set to trigger annual climate change refugee migrations of several orders of magnitude greater than today's refugee crises. However, to actually monetize on a forecast, one needs to convert it into market positions, which in terms of trading Brexit boil down to short positions in sterling and FTSE futures and a long position on the Betfair exchange market for Leave, as the following video posted at 3:40 p.m. on the 23rd of June was the last to iterate. In terms of trading the markets, and despite the markets apparently no longer treating Brexit consequences seriously, a case of whatever happens, it will be business as usual. Nevertheless, a Brexit outcome will result in sharp downward swings for sterling and FTSE, even if the moves prove temporary, as the politicians and central bank officials are likely to respond to both with market-soothing words of nothing has really changed, and of course the Bank of England releasing tens of billions of more market liquidity support. So, taking account of my forecast conclusion for a Brexit outcome, then the current stock and forex markets are offering the potential for a good risk versus reward short-term trades. However, remember that volatility will be high, which means that even if one gets the direction right, then if the stops are not set wide enough, then traders can get stopped out of their positions before the profit-making moves take place. Or that if Remain does win, then the market may gap well beyond one stops, resulting in larger losses than the potential that had been allowed for. And so also are the bookmakers giving what appear to be decent risk-reward odds of 4.3 to 1. So Friday definitely looks set to be a very interesting trading day. Your analyst is hoping that if Brexit happens, he does not get stopped out of his short trades before the profit-making moves take place. Therefore, going into the referendum results, I was short the FTSE futures with what I deemed to be a wide stop at 63.75 and short sterling with again a wide stop at 151 to the dollar, and had built up a leave position on Betfair, where the last edition was at a too good to be true price of 6.2 at 4 p.m. Thursday. And then the polls closed and all hell started to break loose, because at 10 p.m. YouGov, with much fanfare, released their last souped up headline grabbing opinion poll that claimed Remain had won the referendum by a clear 4-point lead on 52% against 48% for Leave, which then was the story that the mainstream press ran with for the next couple of hours. So, just after 10 p.m, and in fact for the next couple of hours, the situation was this in terms of the EU referendum results spectrum. Firstly, the YouGov poll gave the referendum to Remain at 52% to 48% for Leave. Secondly, sterling and stock futures began to soar in anticipation of a Remain win. Thirdly, Nigel Farage early on effectively conceded that Remain had won. And lastly, the bookmakers were all also heavily discounting a Remain win, where even the likes of Alex Salmond later mentions that Betfair had been giving long odds of as high as 14 to 1 on Leave earlier in the night. And this is set against my forecast conclusion that Leave would win by 51.3% to 48.7% for Remain. And so the FTSE and sterling began to soar, soon slicing straight through my stop of 63.75 and not coming to rest until the FTSE had reached 6,445. So my first FTSE short trade of Brexit night was stopped out with a loss. While sterling also rocketed higher, just nudging past 150, then stabilising to hover just below 150. So without any significant result being declared, Gibraltar does not count. It already looked like it was all over, and I would end the night with a triple loss on sterling, FTSE futures and my Betfair position. Nevertheless, I kept monitoring the FTSE and sterling and posted regular updates every couple of hours or so whilst I listened to the BBC's talking heads. And then by midnight, both sterling and FTSE started to retreat from their highs on news coming out of Newcastle and Sunderland that Leave may have done a lot better than the so-called experts modelling had been expecting them to do, which prompted me to reinstate my short position as the FTSE fell at 63.56 with a 100-point stop at 64.56, i.e. just above the high, while sterling came down to roughly where it had been for much of the day at around 148. Then just after midnight, the first real result of the night from Sunderland came out strongly for Remain, 61% to 39%, that sent the FTSE and sterling plunging. It did not stop there, for within 10 minutes Newcastle also strongly declared in favour of Remain, which prompted sterling and the FTSE to plunge further. As the results came in by 1 AM with fewer than 400,000 votes being declared, which meant that the pollsters, politicians and pundits and bookies remained on the wrong side of the trend. Nevertheless, the FTSE and sterling plunged to new lows, with the FTSE now breaking below 6,000 and sterling dipping below 140 to the dollar, which was my target and my limit order, which took me out of my sterling short position, as I had thought that a spike below 140 would prove temporary. Then after a brief rally for the FTSE and sterling, the sell-off resumed after 2 AM with just 2 million votes declared out of an estimated total of 34 million. That by 4 AM had taken the FTSE down to below 5,800 and sterling to below 133. And it was around this time that Nigel Farage stepped forward to claim victory, Independence Day for Britain, who barely 6 hours earlier had been conceding defeat to Remain. By 5 AM sterling had stabilised around 134 and the FTSE around 58.50. So I called it a night soon after 5 AM, moving my stop to 59.50, 100 point distant from where the FTSE was trading at, as my expectations going into the count were that the drop in the FTSE should prove temporary, as I was already flat sterling, though again my expectations were that the drop below 140 should also prove temporary. So whilst I slept, the FTSE recovered more than half of its decline, rallying to an afternoon high of 62.30 and ended the day as one of the stronger performing stock markets of Friday, closing down only about 3%, which did not quite match the doom commentary of the day, whilst the French CAC fell 8% and the German DAX plunged 10%, while Spain's IBEX crashed by 12%. And as for sterling, well, it also rallied strongly, briefly nudging back above 140, however then weakening once more and ending the day at 136. So trading wise, the only real surprise that sterling fell a lot harder than I thought it would. Nevertheless, late Friday was showing signs that it did want to trade back above 140. So what's next? What are the implications of Brexit for the UK economy, stocks, housing, sterling, interest rates, inflation and politics? Which is what I will cover in my next analysis. So ensure you are subscribed to this YouTube channel for notification of